Good morning, friends. My name is Manish Suryavanshi, and I've spent over 2 decades navigating the highs and lows of financial markets. Today, I'm here to share hard-earned lessons on the psychological and tactical pillars of trading. This isn't just about charts or numbers, it's about mastering yourself. Let's begin. Let's talk about greed. The double-edged sword. Greed is the siren song of trading. It whispers, hold a little longer, or bet bigger this time. Early in my career, I watched a 30% gain turn into a 15% loss because I refused to exit, convinced the market would keep rising. Greed blinds you to risk and amplifies recklessness. What is the antidote then? Define specific profit targets before entering a trade. Celebrate disciplined exits, even if the market moves further. Greed thrives in ambiguity, crush it with clarity. Ask yourself, am I trading to grow wealth or to feed ego? I repeat, am I trading to grow wealth or to feed ego? Remember, consistent small wins compound faster than sporadic moonshots. Greed isn't evil, it's a force to be harnessed, not indulged. Something about fear now, it is the silent killer. Fear paralyzes. It makes you second-guess entries, exit winners too early, or avoid trades altogether. In 2008, I hesitated to short the market despite clear bearish signals, fearing backlash if I was wrong. The opportunity cost. Massive. Fear diminishes when you trust your process. I repeat, fear diminishes when you trust your process. Use stop losses, we'll discuss these later, to cap downside risk. Journal your fears, often, they're rooted in past failures, not current realities. Embrace fear as a signal, not a command. Ask, is this fear rational, or am I projecting old wounds? Courage isn't the absence of fear, it's trading through it. Let's talk about patience, the trader's secret weapon. Patience separates pros from novice. I repeat, patience separates pros from novice. Markets trend only 20 to 30% of the time, the rest is noise. Early on, I forced trades during choppy periods, eroding my capital. Now, I wait weeks for a high-conviction setup. Patience isn't passive, it's active preparation. Use quiet periods to study, refine strategies, and mentally rehearse. Ask, am I waiting for the trade, or just bored? Impatient trading is like sprinting a marathon, you'll burn out before the finish line. Let's talk about discipline. It is the framework of success. Discipline is doing what's right, not what's easy. I repeat, discipline is doing what's right, not what's easy. It means adhering to your plan even when adrenaline screams otherwise. I once broke my no earnings trades rule, lured by hype, and lost a month's gains overnight. Build rituals, pre-market checklists, scheduled review times. Automate decisions where possible. Discipline is muscle memory, train it daily. Ask, am I acting on logic or emotion? Without discipline, talent means nothing. Now very crucial active part. Planning and preparation. It is the blueprint for survival. A trader without a plan is a gambler. I repeat, a trader without a plan is a gambler. Every Sunday, I analyze macroeconomic trends, earnings calendars, and sector rotations. Each trade has predefined entry, exit points, and risk parameters. Preparation includes mental rehearsals. Visualize scenarios. What if the RBI hikes rates? What if my stop is hit? Anticipate volatility. Your plan is your anchor in chaos. Ask, have I earned the right to trade today? If not, step back. Study and honing skills. The never-ending journey. Markets evolve, so must you. Dedicate 10 hours weekly to learning. Books, webinars, mentorship. I repeat, dedicate 10 hours weekly to learning. Books, webinars, mentorship. Early in my career, I dissected 100 plus failed trades to identify recurring mistakes. Focus on niches. Master one strategy before diversifying, for example breakout trading. Track your edge. What setups work 60% plus of the time? Skills atrophy without practice. Paper trade new ideas. Ask, am I a student of the game or complacent? Now very important thing, position sizing. It is the art of survival. Risking 2% per trade saved my career. Position sizing isn't glamorous, but it's existential. Even a 70% win strategy can blow up an account if bets are oversized. Use the Kelly criterion. Risk is equal to win probability minus loss probability divided by into bracket average win by average loss. Adjust for psychological comfort. Smaller sizes reduce stress. Ask, can I survive 10 consecutive losses? If not, downsize. Stop losses. The ultimate accountability stops are non-negotiable. Repeat 10 times every day until it goes into your subconscious. Stops are non-negotiable. 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 They're not failures, they're insurance. I repeat, they're not failures, they're insurance. In 2015, I ignored my stop on a sure thing oil trade. Result: a 40% drawdown. Place stops technically that is below support and not arbitrarily. Use volatility-based stops that is ATR in erratic markets. Ask, does this stop respect market structure? Embrace stops as liberators, not constraints. Now about pyramiding. The scaling wisdom pyramiding, adding to winners, is powerful but perilous. Add only when the trade proves itself. Never let a winner become a loser. Move stops to break even. In 2020, I pyramided into RVNL rally, increasing position size by 25% at each key level. Result: a 300% return. But I've also over-pyramided and given back gains. Rule: each ad must have its own stop. I repeat, each ad must have its own stop. Again, each ad must have its own stop. About strategies, your market identity. A strategy is your compass. Mine combines trend following and mean reversion. Test strategies rigorously, 200 plus trades for statistical significance. Adapt, but don't abandon. Avoid strategy hopping. In 2012, I chased every new indicator, confusing my edge. Simplify. Ask, does this align with my risk tolerance and time horizon? Let's summarize. Trading is a marathon of self-mastery. You'll face storms, external and internal. But with discipline, patience, and relentless learning, you'll not only survive but thrive. Remember, the market is a mirror. Master yourself, and the market will follow. Thank you, and let's conquer the markets, one disciplined trade at a time. This is your friend Manish Suryavanshi wishing you good luck.